here for another Facebook Live on this wonderful Tuesday. With me, we have Billy O'Keefe.
Hello, guys.
Real estate extraordinaire from our Sahara branch, always finishes in the top echelon of our Nevada brokers. And Billy, just wanted to say, first off today we're going to be talking about market health, which I think is really important. Let's start with Vegas. Tell us a little about Vegas, how the market's doing, because people always have questions, especially if they're watching different news outlets. They may have a different idea of what's going on in Vegas.
Sure. First of all, by the way, thank you for the introduction. And I wore a long sleeve shirt for you. Figured I had to dress up a little bit more. This is the best I can do right now. So, right now, the state of the Las Vegas market is very healthy. Okay. Well, I don't like overstating things and saying it's hot, it's on fire, it's this, that, and the other thing. But overall, it's very healthy. Inventory is still low.
Yeah.
Depending on where you look, it's somewhere in the low 6,000 unit range. But we've been holding pretty steady at these inventory levels for a while, and even through the COVID shutdown, we didn't see inventory growth. Even with people not buying, you saw a lot of sellers not list and take them off the market. So we kind of stayed relatively steady with this. So the market's very healthy right now with the inventory where it's at. A lot of people from out of state coming in to buy. And I do believe we also hit a record for median sales price this summer as well.
We did.
So everything is looking good right now. So, we're very bullish on the market. And, that's really where things are at right now.
All right, great. Yeah, and there are actually fewer homes going on the market than going under contract, which that hasn't happened in a while, has it?
Right. We have a high demand. Las Vegas has become a very popular home base, landing spot for a lot of people in other states at this point, looking for lower cost of living, lower taxes, a little more neutral political climate, so we're seeing a lot of people, especially from California, come in. I know a lot of agents that might be watching this can probably agree that, they're working with a lot of buyers that are from California. Probably half the buyers I work with are California.
Yeah, there's a lot of people coming from California.
Yep.
I would say even Washington, Oregon, all along the West Coast, and so forth, that love to move to Vegas. It's a great destination, cost of living, no taxes, average sale price. You can sell your home there and come here, and it's pretty amazing, actually.
Yep, absolutely.
Okay, so tell us a little about, so a lot of things going on right now. We're hopefully at the tail end of the COVID situation, or at least the major part of it. We got things happening as far as that goes. But what do you, like when someone says to you, Billy, what do you think, should I wait until the crash to buy, or, which I always find entertaining when they say that.
Right. So it's funny that you say that, because I come across people that are under the impression that, because of the current situation with the economy and unemployment, that a crash is imminent and it's just a matter of time. So, this is something that, we don't have a crystal ball, right?
Right.
We cannot 100% predict what's going to happen. So what we have to do is look at the data, follow history, and make our best judgment and assessments based on the facts and what's going on, right?
Right.
So the main question is, in order to have a crash, we need to have a huge dump of inventory on the market, right? So where's the inventory going to come from? That's the big question. If we're going to have a crash, how are we going to double inventory in a short period of time, which is just going to drive prices down quickly? The bottom's going to fall out. What's going to create that? So that's the main question that I've been really diving into. I've been talking to a lot of really smart people, a couple of presidents of home building companies, talked to one of the principals at Applied Analysis. They run all the facts and data for Las Vegas, unemployment rates, job growth, income growth, population growth, et cetera, et cetera. So these are really smart guys. I also spoke to a couple of owners of some mortgage companies that went through the crash, as well as VP of a very large bank that was the VP of loss mitigation for actually during the crash for a very large bank. So, I'm trying to dig as deep as I can, talk to as many people as I can that might have some insight as to what might be coming down the pipe as it relates to inventory pricing and supply and demand. So that's a lot of the research I'll be doing. And we'll be talking about that. So you want me to just kind of dive into?
Yeah. It's like when we spoke on the phone, it's like you and I had the same opinion about it. It's like, I'm looking for a problem. I'm having a hard time finding one. Remember that?
Yes, exactly. So again, because the people that I've spoken to are, fairly, they all feel about the same. That basically the end effect from the pandemic is going to have little effect on the pricing in this market. And I'll go over a couple of reasons why, but I keep digging to try to find somebody that has logical data and reasons for why there will be a sudden inventory dump that will drive prices down. I haven't found them yet, but I'm willing to talk to anybody that has any real historical data and anything logical about that. But the question becomes, we look back to 2007, and it was a perfect storm for the market to crash because it was easy to get loans, especially investor loans, right? So you didn't need to. It was stated income, stated asset. You didn't have to have any money down. You can just tell them what you made, and everybody could buy houses. It was
right.
And for those of you that were actually in the market during that time, you remember going to builders, and they would have lotteries and lines, and for the demand was so high. The builders were actually selling 30 to 40,000 houses a year for the last 2 years prior to the crash. Okay, builders now are building 10,000 houses a year. Okay, so huge difference in amount of inventory and the amount of homes being built. So what we had in 2007 was a lot of overbuilding, a lot of people buying properties with no equity. And, as soon as the market showed a little bit of a sign of flattening and maybe starting to change, people started to throw their rental properties on the market. Okay. When you throw your rental property, there was no liquidity, which is another major difference. I'll go into that in a minute. But when you have no equity in a property, you didn't put any skin into the game, it's easy to let it go. And that's what I was guilty of it too. A lot of us were just throw the rental properties on the market, get rid of those. We just want them off of our hands. And that was the start of the huge inventory dump that started to drive prices down quickly. And the other thing I want to say about this also is when prices came down so fast, people who owned their own homes, when they found that they were 30, 40, 50% upside down in their homes, it almost became they didn't want the house anymore because it was a bad investment. So
right.
When I was doing, when I was processing short sales and consulting clients on short sales and foreclosures and stuff like that, I would say 80% of those people, it was all strategic. Most of them could have kept their house if they wanted to and kept paying. It was all strategic. Okay, so today the main difference with that is most people own their primary residence, and the ones who bought investment properties paid cash. If you financed 30% down, so there's a ton of liquidity in the market. Okay, so you're not going to see people dump rental properties on the market.
A bunch of foreclosures, yeah.
So because again, the whole foreclosure question, this is another thing that comes up. When are the foreclosure waves going to come? There's too much liquidity in this market relative to the pre-crash market, where things are way more stable. It's not the same house of cards. And I just want to tell a real quick story here. I was out to dinner with 6 of my friends about 3 weeks ago, and we were talking about this. It came up, and I asked them all, going around the table, how many houses did you own in 2007? Oh, Steve, 5. John, 6. I had 9. He had 4. He had 2. How many do you own now? 1, 1, 1, 1, 1, 1. Okay, so that is an illustration of why this market is so different and much more stable. Tons of liquidity.
People got bit once; they're happy.
Yeah. It's hard to get a rental property, so there's just tons of liquidity in the market. So even if something starts to stabilize and even starts to drop a little bit, there's not going to be a panic because people have a lot of money as far as equity in their property. So that's really that's one of the points is the liquidity difference between pre-crash and now, and also the number of homes people owned is drastically different. Okay, so much more stable now. Now, the last point I want to make, the third point is back in 2007 before the crash, you had no government help, right? You were kind of on your own to deal with the banks, okay? The government helped the banks, right? Not us, right?
Right.
So right now, because of the pandemic, you've got the government helping, at least buying time for people, stretching things out. So with forbearance agreements, I'm sure everybody's familiar with forbearance agreements right now, is that the bank is giving you the option of not paying your mortgage because of the pandemic,
Right.
and offering renewals on that every 3 months. I think most banks are offering up to 12 months. So everything's being stretched out. You've got liquidity. People have their primary home that most people will beg, borrow, and steal to keep their primary home. If something happened and they just can't pay and they have no choice, most people have liquidity. They can sell their home, make some money. They don't have to let it go into foreclosure. That's the state that most people are in. And I know I'm talking a lot.
No, but it's good because you're explaining. I agree with everything you've said so far. If you're interested in seeing what 2007 was all about from a lending standpoint, from a market standpoint, watch that movie, The Big Short.
Yeah.
It fills you in as to what happened and why the bottom came out. And I agree with you. Today, I call this. It's way more of a wholesome market. Where, there was, let's face it, in the lending, and there was some bad stuff going on. Like you said, people owned a lot of properties they probably shouldn't have owned, and it was easy to let go of them. Vegas and Phoenix, two of the worst areas in the country to get hurt, properties went down, about 60, 70%.
Yeah, some 50 to 75%
in
some areas, absolutely. And
especially the high-rise condos. And
high-rise condos, Lake Las Vegas, like a couple of these areas.
Which is just coming back now. Lake Las Vegas looks good.
It does. I have my opinions on that. We can talk about that later.
Well, there's also
as a positive.
So. Well, there's really good stuff out there, and also you can still see some of the infrastructure put in 2004, 5, and 6. They haven't even got to yet.
Right.
So
well, Del Webb went in there too, so that's a huge anchor for that community. That's going to help stabilize and bring some, just some, a lot of. It gives it credibility, a little more credibility. But, another thing related that triggered something that that you just mentioned here is, I'm going to have some people ask me, what about the people right now that are, not paying their mortgage or their rent? Okay, so. Are we going to have people being, kicked out of their homes? And so I heard the statistic, and don't quote me on this, somewhere around 30% of people are between rent and mortgage, they're not paying, let's say. I think it was somewhere around
That's what I heard too.
Okay, so.
In Vegas now.
Right. So, which is high, and I could understand why people might think, holy cow, 30%, that's going to be a disaster when, they can't, when the forbearance agreement ends or the eviction moratorium ends. There's going to be homeless people everywhere and a glut of rental properties. But one of the things I've been doing also is asking people, that are in this situation, whether or not this is a choice or a necessity. And I will tell you this. I haven't run it. I'm sure there are a lot of people that are having trouble. Don't get me wrong, but I have run into a high percentage of people that are doing it because they were given the choice.
Right.
They're being conservative. They're trying to wait and see. But if all of a sudden the forbearance agreement ends, the eviction moratorium ends, they are going to figure out, and they have the ability to start paying.
Yeah.
So most people do. So I don't think that 30% is a big factor at this point in creating a problem for our market. So,
and that's a higher factor than in most markets because of the entertainment and the casinos and so forth. Here, I heard the same stat. 30% is not, but I heard 70 of the 30 is what you just said.
Yeah.
People that just decided to be conservative didn't actually have to. Remember, even though the unemployment rate in Vegas is 15, the national is 8.5. So there's still plenty of, there's still plenty of people moving here. There's all kinds of, you don't have an MLS where fewer homes go on the market that go under contract and have it be a market that's setting up for the problem. Right.
And again, you hit the nail on the head, regarding that point you just made. And real quick regarding the 70% of the 30% that will figure out and be able to start paying once these moratoriums end. the ones that don't, okay, what about these people? What about the 30% of the 30%? Okay, still a lot of people. It's likely that most of them still have equity
Right.
in their properties that could sell them and go into a rental property possibly. Maybe they've got some money they're taking away, they can prepay rent. So again, all of these facts and all of the data leads us to believe that the market will continue to be stable. And to your point also is we still have again, the guy I spoke to at Applied Analysis, said that we're still having a lot of people move here. So our population is still growing. Now, he couldn't he couldn't give me the exact numbers because a lot of their stats are based off of driver's license surrenders. And with the DMV having been closed for a period of time, the numbers are a little bit off or haven't been easy to get. But regarding power company meters and how they measure that, they're able to at least know the trend that there has been a significant population growth even during the pandemic. So we're having a lot of people move here, which is really great. It will help our economy, help keep our market stable. That's what's happening right now. So the one thing that was said to me by the guy at Applied Analysis is that, and this makes sense, I think everybody can agree, if there's another shutdown, let's say all of a sudden the United States has to shut down again for 3 months, that could maybe change things a little bit. I still think, it's not going to create a disaster in our market. It'll create more economical challenges. Unemployment will increase even more. So who knows what that will lead to. Also, if the pandemic continues the way it is for another 2 to 3 years without vaccines and things like that, where we're just in this kind of hover mode the way we are, could also affect things a little bit down the road. But those situations are a little unlikely, but still possible.
Yeah, especially the shutdown situation, because with the numbers the way they are, it would be
right.
highly unlikely that would happen.
Right. Well, of course, I'm just playing devil's advocate.
Yeah, no, it's just good. No,
yeah.
I think it's good to think of that.
Yep.
Also, and I haven't heard this a lot this year, Billy, but I have heard it is, okay, and everything you just mentioned, okay, could be potentially bad, but most of it is still looking really good. As far, you just look at the numbers, the inventory numbers. But then again, you also hear, well, it's an election year coming up,
Yeah. So you queued that up perfectly.
To be unpolitical.
Thank you. Yeah. By the way, we no politics here at all. Okay. I don't want to alienate half of my friends and people out there. So never give your opinion. But so
I won't ask him who he's going to vote for.
Yeah. I would never tell you. But anyway, so in the 21 years I've been doing this, I've been through 5 elections, okay? And there's always a group of people that are always going to wait. Okay, I'm going to wait till after the election. I'm going to see what happens. And I respect that, okay? I'm sure that we can wait. I'll stay in touch with you, no problem. But the election comes and the election goes, and I'm talking about Las Vegas. I can't speak for anywhere else. Nothing changes, okay? So the real estate market does not react to one or the other candidate. And, there could be, maybe a little small reaction to the market on the short term, but the real estate market here doesn't get affected. Now, a lot of you might say, well, this is different. And I will agree this election is a little bit different. However, I still think that regardless of who wins, that the market people will still want to move here. The market will stay relatively stable and strong. Even if interest rates go up, I know interest rates have been great for refinances. I've always seen, and again, I want to say this thoughtfully and carefully, but when somebody decides to buy a house, they're committed to buying a house. So if there's a change in an interest rate, it doesn't necessarily make them not want to buy a house. It might change their buying power. So if somebody wins and the rates go up, I still think people will want to buy a house as long as they still feel good about their job.
Right.
They instead of spending $500,000, maybe they have to spend $475,000. Right. So their buying power might drop. Still want to buy. The only people that get screwed with this are the ones that are right on the cusp of just being able to afford an entry-level home. Now they might get priced out of the market, but that's not a ton of people. So even if we saw a point increase in rates, they're still amazingly low. And I don't think that's going to discourage people, because I'm only speaking from experience, okay? I've never had somebody say, oh, the rates went up a half a point, I'm just not going to buy now.
I'm going to resign my year.
Right. Yeah, they don't do that. They get bummed out, and it actually creates a little urgency, like, oh man, I better hurry, so that in case the rates go up more. Yeah. So I don't even think a rate change is going to affect things. I think the rates have been great for refinances and stuff like that. But as far as purchase money loans and people buying, I just don't think that it's really going to have a dramatic effect at all. Coming at if there are changes after the election. So, in my opinion, it's not going to matter. I think the market might adjust depending, but I mean stock market, but that'll be short term, hopefully. But real estate market here in Las Vegas, I don't think is going to be affected by whoever wins.
Yeah. So and I agree. I think especially in our markets where we're in Vegas, the Phoenix area, Scottsdale, the desert of California, and Orange County. I think there's a lot of people that are going to move that haven't moved yet. Vegas is a great spot. Every spot we have is a great spot for a number of reasons. Okay, so I think we're in a good situation as far as the market goes. Once again, don't have a crystal ball, but everything looks good. Everything looks positive.
Yeah, despite Las Vegas not being fully open and not having shows and conventions and stuff like that, people are still not discouraged from moving here. Yeah. It's amazing. People are wanting to retire and move here because of all that they have. But even at a fraction of the capacity of what this city actually potentially is, it's still really good for a lot of people.
Yeah, and a lot of people move here, they'll never go to the Strip, right?
Right.
They want the cost of living, the low taxes. Same with Phoenix. Same with the desert.
It's easy to get around too. So we get spoiled here because I'll never forget. I'm at the West Sahara office, but I live closer to the Twain office, and I'm like, man, I could cut 3 minutes down on my commute every day if I moved to the Twain office. And then I sit there and I go, like, that's silly, because we're so used to everything being so close and convenient. Right. So the city also offers. I think we have 2 freeways and a parkway, easy to get around. A traffic jam delays us 10 minutes. Try living in California and dealing with that on a daily basis, or any other large city for that matter. And it is so easy to live here. You're 4 hours from the beach. You're 4.5, 5 hours from Scottsdale. There's awesome places in Utah. There's just, it's easy to get to Mexico.
You can drive to Mammoth Mountain in 5 hours.
Yep.
Head in 2.5.
Yeah, exactly. So Las Vegas is a great home base for a lot of people, especially people that like to travel and retire, that are retiring.
There's no easier airport to get in and out of.
Exactly.
In Las Vegas Airport.
Yep. And you're home in 20 minutes.
Yeah, and the other thing is remember, they're always upgrading the roads. I mean, they just added a couple lanes on the 215. They're going right down and doing that. So it's definitely made for expansion.
Yeah, exactly. So.
All right, Billy, any final words? By the way, I was just going to say, Amanda and Suzanne, don't panic. He was just using that as an example.
Exactly. Exactly.
Any final words of wisdom?
No, listen, the most important thing for all of us to do is just to, make sure we dive in and know the facts, know the data, talk to people that are smarter than you. It's not a hard thing for me to do. But get the facts. Don't just guess when your clients and people are asking you these questions. Really know your stuff, know the market, follow the stats. Look at history, and you'll be able to make advise people. But again, we don't have a crystal ball. Never, just tell people based on history and current situation. Here's what it looks like. And that's really the market's good. That's the main thing. That's all I have to say at this point. Oh,
yes. Thank
one
you.
more thing. So
I was going to bring it up.
All right, thank you, Paul. Surprisingly, I got nominated for Best of Las Vegas in the residential realtor category. So
that's not surprising.
Oh, well, thank you. He's a charmer. But if you want to support me, do me a favor. This is my votebolv.com/Billy. Go to this website. Obviously, you'll have to type it in. But go to this website, vote for me, and unfortunately, the way the contest works is they make you, or you can vote every day. It's not like a one person, one vote. So just do what you can to help me. Again, this is my direct page to vote for me. It makes it real easy. Any support you can give me, if you want to give it to me, would be great. Thank you. I appreciate it.
I'm going to vote today. All right, Billy, thank you very much for your time. Thank you, everybody. We'll do this again on Thursday. This was awesome. Thank you very much.
Hey, listen, if anyone has questions, please message me. I'm happy to talk and answer questions to anybody. Thank you.
Thank you very much.
All right. Thank you very much.
Thank you.